Alright, Assalamualaikum warahmatullahi taala wabarakatuh. My name is Muhammad Safwan bin Saupi. I'm matric number 288887. Okay, I will continue the presentation related to the introduction of the foreign exchange market. Before we go any further, we must first understand what the definition the foreign exchange market. Okay, the foreign exchange market where the relative price of world currency are determined is essential for international transaction in goods, service and financial assets. End users of foreign exchange market include a wide range of financial and non-financial customers from around the world. The foreign exchange market is also the largest financial market in the world. For example, foreign exchange market trading, the volume is much higher than global equity market activity.
Okay, next we will look at the type of foreign exchange market. There are three types of foreign exchange market, which is the spot market, the forward market, and the future market. Okay, we go first for the spot market. Spot market, which is the currency are bought and sold in this market for immediate delivery or settlement, often within 2 business days. Spot transaction involve the exchange of currencies at the same time of the trade at the prevailing exchange rate. Okay, the second one for the forward market. Forward market is the buying and selling of currency for future delivery at predetermined exchange rate. The forward market allow players to hedge against expected currency fluctuation by locking in the fixed exchange rate for a future date. Forward contract are customized and traded over the counter OTC between the bank and their customer. Okay, the last one is that the future market, a structure or regulated exchange where player can buy and sell currency at the future contract. A contract involves an agreement to buy or sell a specific amount of currency at a specific price and a date in the future. A future contract are traded on regulated markets such as the Chicago Mercantile Exchange (CME) and are the subject to standardized term and margin requirement.
Assalamualaikum warahmatullahi wabarakatuh. My name is FIKRI bin ZAIN and my matric number is 280214. So I will talk about the objective for this assignment. So first of all is we are working on this assignment to understand the foreign exchange market. It is a global market where participants including banks, financial institutions, companies, governments and also traders exchange currencies. This market operates 24 hours a day, allowing for currency conversion and facilitating international trade, business and also tourism. Studying its structural functions and participants will help us comprehend the dynamics and factors influencing exchange rates. Next, we will explore the currency quotes and also the role of money changers in the foreign exchange market. Money changers such as banks or the currency exchange companies facilitate currency exchange transactions. They consider factors like supply, demand, economic statistics and market sentiment to determine exchange rates using real-time data and algorithms. By incorporating profit margins or fees, they earn income while providing liquidity and convenience. Understanding money changes helps us to calculate exchange rates and currency conversion fees. Our final objective is to study the currency exchange process, currency risk management, and also the factors influencing currency quotes. Money changes consider variables like supply and demand, economic statistics, central bank policies, and market sentiment to determine exchange rates. Understanding these components help us grasp currency fluctuations. Additionally, studying the currency exchange process enlightens us about transaction processes, including fees and spread charged by money changers. Lastly, exploring risk management techniques like hedging and forward contracts allow us to evaluate ways to minimize losses from currency fluctuation. This assignment enhances our understanding of currency markets, exchange procedures, and risk management strategies.
Assalamualaikum warahmatullahi wabarakatuh. Hello everyone. My name is Erika Sari AL with matric 274792. For this section, I want to presentation about my part is the method. For the method, we are using to get the information. We are using interview, and the interview this section we get the two things. And the first is market based method. And this is the information we got from our interviewer, this is Mr. FIKRI, is about cross rate calculation when working with currency pairs without the base currency. Money changer takes into account cross rates. For instance, a money changer make the use the first from Indonesia rupiah to USD. After that, from USD going to Malaysia ringgit. Rest to derive the question for the Indonesia rupiah to Malaysia ringgit. Currency pair in the absent and the direct rates. The from Indonesia to Malaysia ringgit cross rate is calculated by multiplying the two rates. And for the second, we have the currency quotation. This is currency quotation are determined by the money changer using a variety of the technique. Here is we decide to interview a party doing the exchange collection data through interviewer. Is a quantitative research method and that involves directly engaging with the participant to gather the information and insight. I think that's all from me. Thank you.
Assalamualaikum, my name is MOHAMAD bin RUZANI 288927. Now I would like to explain about the what are the factors that can affect the price of the foreign exchange. The first one is inflation. It is the rate which prices are rising, and it can also have a significant impact on the value of currency. When inflation is high, the value of the currency typically decline because it has less purchasing power. When inflation is minimal, a currency value typically increase because it is more valuable. Next is political stability. When a country is politically stable, the value of the currency tend to be more stable. However, when the country is politically unstable, the value its currency can be more volatile. For instance, as a result of Datuk Sri Anwar Ibrahim appointment as a Malaysian 10th Prime Minister, the ringgit increased 1.8% to its highest level in 2 months compared to the USD dollar, which further stopped the country political instability. And the number 3 is economic growth. Economic growth is the rate which an economy is expanding, and it can also have a significant impact on the value of the currency. When economic growth is strong, the value of the currency tend to appreciate as investors are attracted to the country's strong economy. After that, supply and demand. The supply and demand for a currency can also influence its value. If there is more demand for currency than there is supply, the value of a currency will tend to appreciate. Next is interest rate. Interest rate the cost borrowing money, and they can have a significant impact to value of a currency. When interest rates are high, the value of the currency tend to appreciate. And last but not least, speculation. Speculation is the act of buying or selling currency in the hope of making a profit. Speculation can also have a significant impact on the value of currency, as large amount of speculative money can flow into or out of the country, causing the value of its currency to fluctuate. In the interview session, we have asked Mr. FIKRI about the rates charged to his customer for foreign exchange, which is 10 Indonesian rupiah for every ringgit. For example, 1 ringgit equal to 3,314.85 rupiah. Then Mr. Fikri's customer want to exchange money amounting to 10 ringgit. Therefore, the actual amount that will be received is 33,148.48 rupiah. However, the customer will only receive 33,048.48 rupiah because Mr. Fikri will charge rate fees of 100 rupiah to the customer. That's all from me. Thank you.
Next, I will present the risk in foreign exchange. Foreign exchange risk refer to loss sustained through foreign currency transaction when the exchange rate is unfavorable. This might have a discriminating influence on the value of foreign exchange investment. There are three types of risk in foreign exchange. First is transaction risk, second is economic risk, and third is translation risk. Okay, we go the first risk is transaction risk. Transaction risk is the risk that a cooperation face when it conduct financial transaction between countries. The danger is that the exchange rate will change before the transaction is settled. The time lag between transaction and settlement is essentially the cost of the transaction risk. Forward contract and option can be used to reduce transaction risk. Second is economic risk. The danger that a company's market value may be damaged by inevitable exposure to exchange rate swing is known as economic risk, sometimes known as forecast risk. Typically, macroeconomic variables such as geopolitical instability or government law cause this form of risk. And the last one is translation risk. Translation risk, also known as translation exposure, refer to the risk faced by a firm based in the United States but conducting business in foreign jurisdiction, and whose financial performance is reported in the company's home currency. When corporation keeps a larger proportion in its asset, liability, or stock in foreign currency, the risk of translation increase. Next, why does interbank currency trading involve the US dollar worldwide? The relative strength of the US economy strengthness is the dollar value. That is why the dollar is the most strong currency. The United States had 2.04 trillion in circulation as of the end of 2020. It is thought that up to half of the amount in circulation about. Many of these built in the former Soviet Union nation and Latin American countries. They are frequently used as physical cash in everyday transaction. The strength of the dollar is the reason government are prepared to keep in their foreign exchange reserve. Government obtain currency through foreign exchange. They also get them from the local business and traveller who exchange them for the local currency.
Assalamualaikum warahmatullahi wabarakatuh. My name is HARITH bin HILMI. My metric number is 28891. Now, I would like to continue regarding our conclusion. Throughout our research, we had the privilege of interviewing Mr. FIKRI, who emphasized the significance of international economic and political factors in shaping exchange rates. We discovered that the international economy, including global trade, economic indicator, and investor sentiment, plays a pivotal role in determining currency value. Additionally, change in political leadership or government policy can introduce uncertainty that affect market confidence and currency exchange rate. Another crucial aspect we explored was the interplay between supply and demand in the currency exchange rate. We learned that money changes rate quotation are directly influenced by shift in currency demand, which can be driven by economic factors, investment behavior, or geopolitical events. Understanding how supply and demand dynamics impact rate quotation enable money changers to make informed decisions and effectively manage risk. However, it is important to note the challenges we face during this assignment. As students with diverse commitment to our study and family, scheduling the interview with Mr. FIKRI proved to be hurdle. Nevertheless, through rational discussion and coordination, we were able to find a suitable time that accommodated all team members, allowing us to conduct a comprehensive interview. Furthermore, we encountered uncertainty and questions throughout the assignment. To overcome this, we sought guidance from our esteemed instructor, Dr. Wahida.
Her expertise and advice proved invaluable, providing us with the necessary direction to clarify uncertainty and address our questions. Dr. Wahidah's support and mentorship were vital in ensuring the accuracy and completeness of our assignment. That's all from our group. Thank you.